Hi, and thanks for joining another video tutorial. What we're going to be looking at today is who to use to acquire this investment properties, the key components, and in effect, why Inlaw and the finance program. So we're going to kind of take this one by the numbers too. Things you need to look for is experience. You want to deal with asset companies that have vast knowledge and hands-on experience with investment properties. And I don't mean people that are brokering properties. I mean investment companies that purchase these properties, rehab the properties, and are on title on these properties when they're selling these properties to end users and investors. Number two, consistency in producing quality assets. The best companies have a cookie cutter process. We're going to cover that and how you can see the interiors of our homes here shortly. Number three, you want boutique services. That also include the purchase aspects as well as financing. Number four, we want a proven track record with investors. And five, we need to have an ongoing support system, including established infrastructure with an emphasis on asset management and communication. Now, who you use also has to be able to show you a track record of consistent quality. Now, what quality controls include is a detailed scope of work that's either to be performed to the home or that has been performed on the property. Number two, high-end finishes. We use only the top-end finishing. We routinely pull carpets out of older homes that have beautiful hardwoods at one time underneath them that are filthy, stained, painted over. We don't put carpet back in those homes. We sand it down to bare wood and we refinish the hardwood floors. We put in brushed nickel lighting. It's those type of high-end finishes that creates a good sound quality product that tenants are happy to take over. We provide video documentation to ensure quality control standards have been met prior to closing on any property that you buy through Inlaw Investments. You're going to get a video. Now, this video is going to cover every square inch of the house, every square inch of flooring, walls, ceilings, lighting, bathrooms, kitchens. We don't provide after photos, basically because a photo can be very deceptive. I can turn my camera a quarter inch to the right or a quarter inch to the left and not show that one area that is either flawed or has not been finished. So we provide video documentation to you, the buyer, before you're required to close. We provide warranties on the property. We don't want your cash flow being affected by costly maintenance and service calls. And we do targeted marketing to well-qualified tenant candidates and a thorough screening on all of them. We check for work histories, rental histories, criminal background checks, a very thorough screening to make sure that only the top quality tenants are moving into these A-grade properties. And what consistent quality ends up with is a very beautiful finished product that has great curb appeal. We're looking at a couple of properties right now. We did not have to do a whole lot to the outside. The roofs are basically new on most of these properties. If they're not new or within 10 years, we put a new one on. New guttering. We dress up the outside so that they show quality before a tenant even gets a key into the front door to view the interior. And providing these beautiful homes has to be an everyday occurrence. As you can see by looking at two other actual in-law properties, the curb appeal is great. We want these properties to attract buyers from the outside. Quite often, we have people that go up to the doors and knock on the doors while our rehab crews are still doing the interior work, inquiring as to who they call to rent these properties. And the most important thing to remember, attractive properties draw attractive tenants. People that are Section 8 tenants, which we do not deal with, people that are not well qualified from a credit or a work history standpoint, know better than to even call our property managers. These are top-end properties for top-end tenants, and that's all that we draw with our beautiful exterior quality. And that curb appeal to bring in the right tenant transcends many different areas. If we look at the property on the left before, this property was in fairly poor condition on the outside. It had a bad roof. It had bad curb appeal. It had bad paint. The only contributing factor that made this property even remotely attractive for us as an investment company was the fact that it had maintenance-free vinyl siding, soffit, and fascia. So what we've done, if we look at the left-hand picture as compared to the right-hand picture, we went ahead and put new exterior trim colors. We used 3 different colors. We've put white trim around the windows. We've used gray on the brick out front. That's the same color that we put on the concrete steps that you see leading up to the front door. And we use a 4th color, an accent color, on the shutters around the windows. And if you look closely at the garage, you'll see the accent color in the white trim as well. Now here's another little gem that we did not too long ago. The exterior of the paint was peeling pretty bad. For the most part, we try to buy these houses so they've already got really good curb appeal, and the interiors are pretty bad. However, this is another one where we've went ahead and used a broad palette of colors. You can see there's 4 colors used. The body of the house in a gray, the foundation and steps in a darker gray. We use white on the trim, and we brought in a 4th color, the light blue or the powder blue, for exterior accent colors. So ultimately, we end up with a beautiful product with the type of curb appeal that is going to attract great tenants. Now, I do want to point out that to get a better picture of these homes on the inside, you can go to our website, inlawinvestments.com, and look at before and after videos and after video walkthroughs. And you can actually see the videos of the interior of these same homes once we've finished with them. They're beautiful. You should check that out when you're done. And another great property, if we look at the finish quality on the left as opposed to the finish quality on the right, there really is a world of difference. Again, we want all of our properties to have magnificent curb appeal and the type of appeal that we need to draw the great tenants inside. And our most important aspect of quality controls is the warranties that are provided. Our 6-month warranties cover the most essential and costly aspects of investment properties, including plumbing, electrical, HVAC, roofs, basements and foundations, structural aspects, appliances. And because our crews have already rehabbed the houses, all maintenance is handled by those in-house construction crews who are intimately familiar with each property that we manufacture. The warranty covers what we refer to as the load test in this industry. We can replumb a house, new electrical, but until we have a tenant that's going in there and these houses are experiencing the normal everyday wear and tear that a young family puts onto it, it's usually within that 30 or 60 day period of the load test where any drips will be identified, any switches might stop working. So we make sure that your warranty covers that load test period so that once that house is broken in and the tenants are established, there won't be costly maintenance calls that are going to affect your bottom line. The most exciting part and what sets Inlaw Investments far beyond any of our competitors in the markets is that we are the only firm that we know of that provides in-house financing on all of the properties that we sell. All of the loans are originated and underwritten internally. That's within our own firm. Loans are transferred to servicing companies and national banks for ease in payments. We provide fixed rates. We're one of the only lenders or sellers with a fixed rate interest that is not LIBOR based or adjusted. And Inlaw does not finance properties sold by other firms or brokers. By financing our own properties that we have purchased, are entitled on, and have completed the rehab on properties that we're confident that we're going to maintain long-term tenants, we can maintain the highest levels of both quality and workmanship. And I'd like to take a close look at the financing that's provided through the Inlaw program as compared to the handful of other lenders in the U.S. that are willing to go ahead and provide upfront financing for investment properties for both foreign and domestic buyers. Most lenders in the U.S. that provide a loan product specifically for investment properties require a 50% down payment with a loan rate that starts between 8 and 9% on a 3-1 adjustable rate mortgage that is annually adjusted based upon LIBOR indexes. And we would advise that you use extreme caution when offered with a loan product that's on an adjustable rate mortgage, which is what is available through most lending institutions that are loaning on investment properties. So they're on a 3-1 arm. Now let's look what that is. That means that the property will start at between 8 and 9% and will adjust 3 times at the end of each year based on LIBOR. Now LIBOR is the London Interbank Offered Rate. Simply, it's the interest rate that banks are prepared to pay to borrow money from each other. Now, that's borrowing in dollars, yen, euros, pounds, for anything from 3 months up to a year. And again, in being very wary of the arms, let's understand how LIBOR works. Every day, a group of number crunchers call up 18 banks, and they ask them how much interest they would pay to borrow money from another bank. Now, the number crunchers toss out the 4 highest and lowest rates and divide up the remaining 10 to get an average. That average is published as LIBOR. Now, the next day, they do it all over again for every currency and for every maturity. And LIBOR is a big deal because it's used as a base rate for all kinds of other loans as well. And here's how that works. Every day, a group of a number of number crunchers call up and this LIBOR arm is a big deal. Your home loan, for example, might be an adjustable rate mortgage. And if that's the case, it might be priced at 3% more than the 3-month US dollar LIBOR. And if LIBOR fails, your interest rate goes down. But LIBOR never fails. It rises and your rate goes up. 3 annual increases every year for 3 years on a 3-1 arm can turn what were initially attractive returns into poor returns. Now, there's a lot of lenders out there in the United States right now that will finance investment properties. However, what they do is they charge 50% down and the other 50% is put on the same 3-1 adjustable rate mortgage that created so many nightmares for so many property owners over the years. In-law financing works a little differently. To begin with, 35% of the purchase price is brought to the closing table as a down payment, and the other 65% of the purchase price is underwritten internally within our company. The loan is originated at a 9% fixed rates, and all of the 11 to 14% returns on the pro formas that we send out are based upon this 9% fixed rate. However, very important, our investors can refinance at a lower rate, quite often with their own financial institutions that don't like to originate the paper but will refinance it, at between typically 5 to 6% rates, which will increase the cash-on-cash returns up into the 15 to 20% range. So, why don't we take a look at the big picture here? Now, in-law financing can be utilized on a long-term basis. You're pulling better than 11%, that's really not too shabby. However, in most cases, since banks don't like to underwrite or originate loan paper on investment properties, we make it simple. Now, in-law originates and underwrites the initial loan, after which time our investors can utilize their own traditional loan avenues and refinance at a lower rate, which takes the returns from a pretty respectable 11% up into the 16 to 17% range. And let's look at the next few slides so that we can better comprehend how this whole process works and how the numbers pan out better. And here is just a typical loan scenario. Let's say that you're buying a 1,300 square foot, 3-bedroom, 2-bath split level home from us that has a current sales price of $78,500. Now, with a 9% interest rate amortized at 30 years, carrying 65% on a loan, the down payment for this property would be $27,475. So, typical loan scenario, let's take a look again. Purchase price $78,000, $27,000 and change down. The rent that would come as a result of that, let's call it $900, and that's on the low end. After we deduct $75 a month for property management, our insurance and our taxes prorated, that takes our operating expenses minus $234.36 and a net operating income of $665.64. Now, the debt service, the monthly loan payment at $410.56, on a $27,000 investment, that gives us roughly $250. The hard numbers on it show a cash-on-cash return right out of the gate at 11.14. Now, figuring that mutual bonds, CDs, treasury bonds, IRAs, traditionally right now are returning under a half point, that 11.14% is pretty darn okay. But let's take a look at another aspect of our loan program. Now, as mentioned, most people utilize our loan program simply to have the loan originated for them, and they're making an 11% return. After a couple months, 2, 3, 4 months, most people refinance using their own traditional lines. Your bank doesn't have to originate a loan. They don't have to do any underwriting on it. So therefore, it's a simple refi. Now, if we use all the same numbers, but we refinance at 6%, the loan servicing drops to $273.91. The new monthly yield goes to $391.73. That is a cash-on-cash return of 16.19. That is why so many people utilize our financing program. Going out of the gate, 11% returns are good, but what we want to do is we want to help you build up a portfolio where you're pulling 16% or better on all of your investment properties. And of course, at Inlaw, we're really happy to accommodate any purchasing criteria. We're pleased to provide financing for those who want to leverage the assets and refinance at a later date. We do, of course, accept and encourage cash purchases. Cash purchases, which are not subject to loan payments, receive a much higher cash flow on each asset. You're getting the entire $900 minus your management, taxes, and insurance. We're also able to fulfill bulk orders, but only on a one-by-one basis, because we want to assist our investors in building up a cash flow portfolio. For this reason, we do not deal with or do business with any institutional level investors or with brokers. And of course, we're pleased to provide counsel, advice, assistance in the investment property experience for non-seasoned buyers. And when you need Inlaw Investments, we're here for you. We provide back-end support and additional warranties that are provided. And here's our goals for you as the investor. We want to provide a professional, aggressive property manager who places an emphasis on communication with you, the property owners, our clients. A thorough background checks done on all applicants, including work histories, rent histories, criminal background checks, in addition to the credit reports. But we closely communicate with you, our client, so we can provide a comfortable and hassle-free experience. And because of all the services that we offer at one doorstep, this eliminates the need for you, our client, to micromanage your investments with Inlaw, because we provide this unique set of boutique services for each and every buyer that we work with. So once again, for now, I'm going to be signing off. However, for more information on our program or to view investment properties that are available for purchase, please contact us. info at Inlaw Investments. Thanks for listening.